Brad Thomas reporting here with the Motley Fool, here today at Recon 2014 in Las Vegas. I'm here today with David Brain, CEO of EPR Properties. David, good to see you today.
Good to see you, Brad. Good to be with you.
Same here. Well, David, EPR has been around 17 years, so we're seeing a lot of new, single-tenant REITs out. But your company's been around for quite a long time, and you've been with the company for quite a long time.
Yes, sir.
But let's move into current, real time. First quarter earnings, you hit 99% occupancy. You can't do any better than that.
It's pretty strong. It has usually that way, but that's as good as it gets. Yes, sir.
Exactly. So tell us about your first quarter earnings and some of the other metrics.
Well, things are really on plan for first quarter. First quarter is always a little slower in terms of portfolio development relative to our year guidance, because of just weather around the country. It just comes out a little slower. But we ended up with about $70 million in acquisitions. By the time we did our call, we had over $200 million in acquisitions on the trend for our guidance of $500 to $550 million. We had earnings in place with our guidance of about right on place for about 99 cents, a little slower than normal because of the ramp up through the year per share. That was consistent with our guidance then of about $4.15 a share, which we've lowered because also during that time we found an opportunity to make a sale of part of our portfolio that will take our guidance down by about 10 to 12 cents. But we thought it was important strategically to show the saleability of our portfolio, which some people have questioned at times because it's less commodity properties and more specialty properties. And particularly, we had one tenant who'd had a little bit of adverse news, although our rents have still been very good from them, not missed a dollar, and people questioned really the value in that name. So the chance to sell that, we took off some high yield assets for a point in time. We thought it was strategically important, and we still have a very good value, and we're not reducing our dividend at all. And our payout ratio goes from 82 to 84%, so still very strong.
Right. Let's talk about that balance sheet. I know you've got an investment grade balance sheet. How are you putting that money to work?
Well, we're putting that money to work in three categories: our entertainment, which is our traditional category of investment, recreation, and education, and fairly evenly between those three categories. As we did last year, we had $400 million of investments last year, new investments about evenly spread between those three, and so has been our guidance, and so has been the results year to date. And we feel we're putting that to work at high single-digit yields of initial yields, with growth over the life and 15 and 20-year leases that really are yielding low double digits on an unlevered basis. And so levering the company conservatively at about about 35 to 40%, we're generating a nice yield. Last year we generated 14% to our shareholders, and we think that's a very achievable number.
Great. Last question, I want to talk a little bit about the land. I know, as a single tenant owner, landlord, you don't have a lot of land, but you do have a sizable tract of land up in Sullivan County, New York. Looks like that land's getting ready to go to work. Can you talk about that?
Yes, we got involved in a project that failed in '09 due to the failure of a bank that was part of a construction loan. Actually under construction was a casino project, and then casino projects are big, and you really couldn't put something like that together speculatively for quite some time. Then it was going to restart about a year ago, but then the state of New York started discussing changing the casino laws. So everything had to wait until that was settled. That's been settled now. There is an upgrade of licensure. We have a Class 2 license, potentially upgradable to Class 3. We'll have to wait through at least till Q3 of this year, and then we expect new license will be awarded. We expect to be awarded a license upgrade, and it will open then in fall of 2016. So that it's contributing money to us now with our tenant who's an applicant for that upgrade license paying about $250,000 a month, and we expect once then that goes in place, they'll start paying their ground lease that'll be closer to $750,000 a month once that come the fourth quarter of this year.
Great. Well, David, thank you so much for the Q1 update, and look forward to seeing you next time.
Well, my pleasure. Good to be with you.
Great. Thanks so much. Brad Thomas, here with the Motley Fool. Thank you.